S&P 500 as we get ready to trade January week 2. A lot of stuff coming up this week. Powell's confirmation hearings are on Tuesday morning beginning at 10 a.m. And we have CPI data coming out Wednesday morning pre-market. Overnight, Tuesday into Wednesday, we're going to get inflation data out of China. So that kind of kicks it off around 8 o'clock, 9 o'clock Eastern time, p.m. Tuesday night. And then by the time we get to the morning pre-market to trade Wednesday, we're going to be getting that out of the U.S. And the market already had a complete meltdown this week over the Fed minutes that came out on Wednesday. So we're starting off at a look at the intraday chart. I'm pointing over to the left side of the chart here. Here's where the high of the day was on Wednesday for the Fed day. We kind of were only looking below 4,800 and failing. Here was where the Fed minutes came out at 2 o'clock. We tried to make a little bit of a breakout initially when they were released, but the result after seeing some of the things that were said in that meeting, it became clear that a lot of people on the committee want to get going on tightening a lot sooner than the market expected. It isn't just about the tapering of what they've been doing, but now some of the members want to get going on tightening as soon as March, whereas we were thinking more like the summer, if not the fall of this new year before the tightening would begin. So the market just absolutely lost it and sold off down to the 50-day. By the time we got to Thursday, we were looking to the 50-day simple moving average. We tried to bounce on Thursday. We only got to about 47.25. Still have this scene of the crime sitting out there from when that data was released on Wednesday. And then when we zoom in on the chart for what happened here on Friday, which I will try and do here for you here. We came into the day on Friday and we wound up breaking down. I'm waiting for this to blow up. Here we go. Broke down below the 50-day simple moving average. Intraday established a new low for the month, for the year, for the week at 46.62 and change. We tried to bounce back up. Couldn't clear the opening level on the day. Got back into the initial balance range, but couldn't clear the open. Couldn't get that daily candle back to the green. And then we sold off again. We tried one more attempt late in the day and then rolled over and sold off into the close, but stuck the landing with a weekly close above the 50-day simple moving average. So that was good that we held that together. But this is going to become an extremely important line in the sand for us as we go into next week. So let's look at the roadmap. Here is our 50-day simple moving average. If we come in just week on Monday and make a weekly open below the 50-day simple moving average, we're just going to continue the selling as we head into Tuesday and get prepared for Powell's testimony and Wednesday on that CPI data. Or we're going to come in kind of flat-ish and continue holding this 50-day, and then our eyes are going to be to this high that was established on Thursday at 47.25 and trying to get through that. If we were to try and get a bounce going this week, we have the scene of the crime to return to back here where the Fed minutes were released, but we also are missing an all-time closing high to go with the new all-time high that we set on Tuesday. On Monday, we came in and established the all-time closing high. On Tuesday, we made the all-time high, but started selling off and didn't close at the all-time closing high that we need to do when we establish a new all-time high. There's a possibility that maybe we're going to get this business taken care of. Return to that scene of the crime, make that new all-time closing high, but no new all-time high, and then proceed to sell off after that. If that's the case, then we're going to be able to get into much higher strike puts. And I do not think that this 50-day will hold us if we were to get back up here and then come all the way back down here once again. I think we would break and we would probably at least double this whole move down, which would at least get us down here to this trend that was established in December with the December low, the back test of the December low as we headed into Christmas. Both of these lows tested and held above the 100-day. We have a gap down here that would get us back to the close from this day where we made that second low in December. If we were to fall down to here and hold this trend, this is going to be a great buy point. We're going to turn and we're going to be back towards an all-time high in no time. However, if this trend were to break, we have a much more serious bit of selling that we have to face. And for that, we look to our other daily chart with our fork on it. If we were to come down here to the 100-day and not hold this trend intact, we would also end up breaking our bull fork. Just below the bottom of our bull fork would be our minus 5% off mark. Maybe we would hold this, maybe break this low that was established here at the end of December, but hold a higher low against ultimately this December low here. But if all of that were to break and we get below the 5% mark, really there's nothing stopping us from making it all the way back down here to where our Q4 lows were back here in October. Our low for Q4 and for the month of October is what established our bull fork here to begin with. It would be a pretty nasty break of the 200-day simple moving average, and it would get us all the way down here to 10% off on the year. And maybe this is where the buyers would come in and take us back up again from there. But it all begins here with a break of the 50-day simple moving average. And either we're going to come in kind of weak and sort of vacillate in here and then break down. Maybe we're going to gap down open to start the week and establish resistance over our heads at that 50-day simple moving average and just get going on this selling. Or we're going to come in strong with a little bit of a head fake here and try to just work out this business that we have hanging over our heads with the scene of the crime and the all-time closing high. I will say this, I think it would be pretty bearish to go and take care of this business now, early, as I don't think we would make another new all-time high. And even if we did, it would be just a very nominal one and would only be a setup to buy puts and take us down. It would be better to just maybe come up here, fail below our 10-day simple moving average, reload on our puts, and just get this going now. There really isn't any reason to be making new all-time highs when we have earnings on deck in a couple of weeks. It would make a lot more sense to get this business taken care of now, and then have a catalyst to catapult us back up again with earnings coming out in Q1. Okay, I hope that all made sense. The other thing that I wanted to just go over real quick, our volume leader on Friday on the put side were these 4600s. These held the high $11 window on Friday. If they continue to hold the $11 window, that's going to be a clue that we are not going to be heading higher. However, if these lose the $11 window, then maybe we want to look over here to some calls instead, or maybe we just play ES and leave calls alone. But if you do get into calls, I would not go any higher than the 47.50 strike. Those held the $5 window into the close on Friday. I'd rather be down here maybe in these 47.25s because we know, I'm pointing over here to the chart again, we know that was this Thursday high and our bull forward median. We want to, when we get into some calls, we want to get into something that's going to eventually go in the money for us, because that's how we double and triple our outlay. We don't buy S&P 500 options to just make a buck or two on them. We buy them to try and make a double or a triple on them if we can. And so we don't really want to go above the 47.50 strike. In fact, we'd kind of like to stay in the 47.25 strike as our highest one if we can pull that off, if we get into calls at all. And on puts, we don't really want to, we want to try not to go below this 4,600, but I tell you what, if we gap down open below the 50-day, it's okay to go below that 4,600 strike, because as I said, we're going to at least come down to here. If we can't establish support at the 50-day, we're going to be down here in these 4,500s anyway. And so maybe we can look at the 45.90s, the 45.80s, the 45.75s. Okay? Hope this video helped you out and gave you some good information for a strong start on the week. As always, good luck and good trading.